everyone. This is Cherry Chen, real estate accountant, small business accountant, and also a wealth hacker here. If you're a small business owner, you may wonder why there is a chance that you would receive your financial statements, year-end financial statement from your accountant, and you look at the number at the bottom. It says that you make X dollar amount of income. And you look at your bank account is not there. And your bank account does not show that you have that amount of income sitting in the bank. So what's happening? Why are they so different? I would say that according to this book that I bought and I read earlier this year, which is something like, to me, it's a small business owner Bible. To me, you have to read this. Is that majority of us do not work really well with the historic data, and even me as an accountant also struggle sometimes to understand why my taxes are showing such a high rate, high income compared to what I have in my bank account. So cash flow management is not really something that people inherently know how to take care of. So based on this Profit First book, again, I am not a Profit First registered licensed accountant, but I can tell you I implemented only a small bit of their system, and I feel a lot more comfortable in my financial situation than other people. So I want to share with you today about this system. So essentially, when you implement this system, you have to open 5 bank accounts, 5 business bank accounts. It could be a saving account. It could be one operational account. So I have one checking account for bank accounts. I don't have any preference in terms of whether you go for BMO versus TD versus Scotia. I personally use Scotia because I have been banking with them for many, many years. Now, I went in and I requested to open the bank account. I was able to keep my original checking account, and I have 4 additional accounts. They're all savings. So there's no fee attached to the savings account, just as a tip. So when the money goes in, I would deposit it directly to this account called income account. So I would deposit it directly to the income account. So the entire cash amount goes to income. And when you receive the income, you deposit it directly to the income account, and then maybe every 2 weeks you would go into the bank account periodically. The key is to periodically go into the bank income account and do some transfer. The way that I do my transfer is that I would transfer a portion of the money to my tax account. So the tax accounts include CRAs, HST payable. The tax account also includes the income tax, the corporation income tax. It also includes your corporation income tax as well. So when I allocate the percentage to my tax account, it has to be large enough to cover all 3 of the expenses. Now, I pay CRA first because, as you know, we all have to pay the government first, regardless how your cash flow situation is. So never really take away the money that does not belong to you. So I allocate a percentage of my gross deposit directly into my tax account. And then I allocate a percentage to my profit. Because at the end of the day, if you're a small business owner, the purpose of being in the business is to earn a profit. So first of all, I would deposit like a certain amount. If you say that, hey, like at this point, I can't really afford to pay a profit to the shareholder of the company, you are the shareholder of the company, then you allocate at least 1%. So what it means is if you have, you make $1,000, you have $1,000 deposited, then you would deposit $10 into this profit bank account. And then afterwards, you will allocate a portion to the owner's compensation account. And at the end, whatever that's left, then you would allocate to the operating expense account. And all the expenses, in my situation, all my expenses, including payroll, sponsorship, everything goes through these operating expenses account. And this is how I manage my cash, and it makes me feel a lot better in terms of controlling my money, and I know exactly where it goes. And I would go as far as hiding, let me just get this, hiding some accounts in your personal banking system. I would hide this tax account, I would hide the profit account, because these 2 accounts are the accounts that you're not going to touch until much later. And then maybe I would hide the owner's compensation, or maybe I don't, but I would pretend that I don't have that money. And all I have is the operating expenses for me to spend. So I control my expenses. So in humans' mentality, we naturally look at a bank account, we think that, hey, we have the money, we can spend them all. If we hide the tax account, which will accumulate over time a large balance, hide the profit account, hide the owner's compensation account, and we only look at the balance in the operating expenses, we have to figure out somehow a way to control our expenses, and over time we would be able to reduce expenses. And that's how it works. And this is how it helps me to control my cash flow in all of my businesses. Until next time, happy Canadian real estate investing, and also happy wealth hacking. Make sure that you get your tickets at WealthHacker Conference on November 9th, WealthHacker.ca. Until next time. Hey guys, thank you for watching the video. If you really like what you're watching, make sure that you hit the subscribe button below so you would never miss a real estate tax tip again. If you really want to learn more about real estate taxes in Canada, make sure that you come over to my website at WealthHacker.ca. The link is in the description below. Make sure you visit us. Until next time, stay awesome.